Welcome to the March 23rd, 2020 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman from the storm of 2020. Definitely a crisis, a global recession, unexpected and not very predictable at the beginning of the year. If you recall the heights of euphoria, we're going to cover details on the crisis, the response, the McGowan Group team, what we're doing for you, and this is a great time to get with the team that cares and update your plan. We've been on the phone with clients all week in the midst of the crisis, making sure that everybody is taken care of with what I believe to be the very best strategy to get to record income and to cement potential record highs. In 2008, in the midst of that crisis, we used a method for clients that I'm going to take you deep into because you get paid to wait and you control baskets that are quantifiable in terms of their outcome. And that's exactly what we're going to do from the midst of the crisis. Get to NetWorthRadio.com, especially this week, because at NetWorthRadio.com, my father, Dean McGowan, gave us advice on what he was doing this week and a perspective that goes all the way back to World War II, through the 50s, 60s, and each crisis there. I've been in the business now 30 years, and my experience includes 9/11 and the tech wreck, the 2008 crisis, both of which we recovered in less than 12 months to record profits, and more importantly, forward record income that could be used to cement retirement and gain advantage during the crisis. And that's exactly what we were working on with our clients at McGowanGroup Asset Management this week. So be sure to click that bell and subscribe for updates as we go through this crisis together in a national emergency. Here we are, Dow Jones Industrial Average year to date. We hit 29,500 and change at the high. We said priced for perfection, meaning the markets were priced as if everything was going to continue to be good forever. That's clearly not true. They call it a black swan, something you rarely see, a market event that changes everything almost instantaneously. And in the oil market, of course, MBS, the leader of Saudi Arabia, his decision to pump all the oil he could, likely because he's completely out of cash, plays into that decision as well. Two black swans, and we'll cover global impact as we go forward. Dow Jones Industrial Average this week bottomed at about 18,800 in the futures, 18,900 here. A Friday rebound, which kind of wilted at the end. And does that mean that the bottom has been reached? It could be. There are technicians saying 18,000 would be the next bottom if there's another wave of panic. But here's today's question. Does a 35% correction in the Dow Jones Industrial Average accommodate a recession? It did in 2001, 2002, and of course on 9/11 the markets were shut down for 5 days. The tech wreck and the recession took place over a much longer period than the likely recession from the coronavirus, based upon solutions we got this week saying there are preliminary tests that say they know how to treat this and even to enhance the immunity to it for those that are exposed. Now, the Dow Jones Industrial Average during the swine flu. Super Chuck Norris, Stephen Norris, our team member, many of you know him. Well, he pulled this. The swine flu began April of 2009 and continued all the way through 2010. This is that same time period, a 38% increase in the Dow Jones Industrial Average. A big part of that was the bounce back from the '08 correction. Here are the confirmed cases globally, approaching a quarter of a million, likely more by the end of the weekend. Global confirmed deaths just under 10,000. About 10,000 people in the U.S. alone die from the flu every year, and those numbers, when we get to the U.S. U.S. confirmed cases 12,400 at this count, likely topping 15,000 in short order this week. Confirmed deaths 193. Now the tendency would be to say this is the worst thing we've ever seen. But in fact, the swine flu infected 60 million Americans and killed 12,000. And the numbers are nowhere near that at this point. And during that period, well, of course, the market was unaffected. What's different this time, of course, is the national shutdown and a global shutdown that confirms, yes, it's at least a temporary recession. What are you looking for to say that the panic is over in the financial markets? It is likely definition of containment, saying when is this contained enough to open the restaurants and bars? Watch for that news, because that confirms that we're likely reaching the end, at least, of the financial panic. Now, what's it like when there are disruptions? Well, let's go to 2008. The U.S. banking system was rendered insolvent, huge mortgage defaults, real estate down 50% at the worst point, about 30% if you took the whole year of 2008. The real estate market didn't start to turn until 2010. But if you bought a building in 2010, you're a happy camper. If you tried to sell your house right now, in the next 60 days, it is highly likely that you'd take a huge discount and you wouldn't realize anywhere near the long-term value of that property. Well, the equity markets, financial markets, and the global bond markets are the same way at this moment. What you've got is a substantial discount. One of the lessons from 2008 that I wanted to cover today, we had Houston airport bonds. And if you had a $100,000 bond paying $5,000 a year, Houston airport was fine. But everybody was so worried about defaults, that bond traded to $68,000. And Andrew Orton, the Ortonator, our director of research, was able to pick a few of those bonds off extra with the cash we had. Plus, we had had some going into it, but the $100,000 wasn't gone. A bond or a loan matures at par value and pays interest, assuming that the issuer can pay. The assumption that there were going to be massive defaults is the reason it traded that low. Well, global high yield bond funds are very similar. These are two that we used. And you've got the power of reinvestment. Here, a nice dividend every month from interest. It did not go down during the crisis, by the way, because it's a basket of loans and bonds. Had you reinvested through the crisis, the total return over the 5 years by 2012, it was a 12.5% average return, a total gain that was 80%, or a total profit. And you had the reliability of income, not without price risk, but very much worth it. Why did this bounce back so fast? This is the way, this method or category is one of the methods we use to recover to record profits in 2009, but more importantly, to build even more future income. And the power of reinvestment can also overcome the impact of dividend cuts, should there be any. This is another global high yield bond fund, a 16% total return, 113% over that 5-year period, including the crisis. Well, that technique, especially with the safety and income portion, using some of those reserves to reinvest and actually pick off some bargains at the apex of panic. If you looked at the 2008 situation, the market lost half its value. It's already been down 35%. Is the recession really as bad as 2008 when the banking system was insolvent? The Fed answered that this week with quick action, calling on Congress to let them back the money markets, but the banks have 7 times as much capital. And my dad, Papa Dean, on the broadcast this weekend at NetWorthRadio.com, I urge you to go there and listen to what he says carefully, once if not twice, because he gives you that historic perspective. He said the banks have 7 times as much in reserves as a percentage as they did in 2007. The U.S. banking system not in danger at this point, and the Fed's already taken action to stave off the impact of what is likely to be a brief recession because of what the Fed has done. They learned a lot in 2008 when CNBC's Jim Cramer said they know nothing. Well, this week they proved they learned a lot. And that may mitigate the impact of this crisis. Plus, news of containment and treatment are ahead, likely over the next 30 days. This is oil. Back in 1998, oil was 10. There's the high at 145. This week, hitting $20 per barrel briefly. That is an inflation-adjusted price lower than 1998, the lowest price on oil in modern history. Does that stay there? Well, with energy companies, energy infrastructure, setting on dividend reinvestment, because in 2016, the last time oil was below 30, you had a huge rally in the energy infrastructure over 7 months. That's worth waiting for, and it could be one of the best bargains for those that are more aggressive in the current situation. Now, the data sources we use to monitor the coronavirus, and we're watching for that rollover point. There are two sources we use. They are both linked at NetWorthRadio.com. Let's go ahead and go to that specific chart. There's the global map. This is John Hopkins. There's one other source that you'll find at NetWorthRadio.com at the bottom of the busy box for this week's program. Again, our team is devoted to giving you the right research to make the right decisions through a crisis and to come out of this with record forward income and achieve record value from gain potential as quickly as possible, as we did in 2003, 2009. Get the team that cares on your side. Here's the number of confirmed cases, about that 250,000 I mentioned, total deaths, and then by country, it's probably good to monitor that, to watch for the rollover point when this thing starts to subside, especially on the number of active cases, and that's at NetWorthRadio.com. Thank you for joining us in this special broadcast. YouTube, McGowan Group, hit the bell and subscribe. We'll be right here for you through the crisis with key insights to investment strategy. And by the way, money market yields are going to zero. Well, that's a big deal because most chief investment officers have been used to getting 2% in the money markets. You're going to wake up, likely see that based upon the T-bill this week, hitting almost exactly 0%. That says we've got to prepare for what's next if we're investors, because most people's target is substantially above zero. I'm Spencer McGowan, your financial weatherman, president, McGowan Group. Come see us at the Crescent. And be sure to go to NetWorthRadio.com, fill out the preliminary client questionnaire. We're grateful that you're with us to get great guidance through the crisis. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who are devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, Investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.